Okay, hello, welcome guys, welcome back. This is Sam Olubumi, your profitable trader, and this class is being hosted by White Institute FS. So yesterday we in our 0 to Mastery live sessions. Yesterday is day one, and we talk about intro. We have an intro. We talk about market structure. We talk about order block, and we also talk about our entry pattern. But today we'll be talking about top-down analysis, which we denote with TD, and we'll also be talking about time frame combination, top-down analysis, and putting it all together. We are going to tie the knot. We are going to put all what we've learned together. Are you with me, guys?
Yes, sir. We're still with you.
Okay, that is great. So, that being said, let's go straight to our chart. Let's go straight to our charts for today. Let me quickly do something. Let me sign into, because many of you guys, I notice you trade crash and boom and all those stuff like that. We can use this thing in any market, but let me go for PS, because I don't want you guys to be so much dependent on binary alone. So with that being said, let me just pick another coins. Okay, let's analyze CHF JPY. CHF JPY. I see J. Let's analyze it. So today I said we'll be talking about time frame combination. So let's start from there. Let me just put the chart up. So let me go back to our whiteboard marker now and just have a little discussion around that. So TF, our time frame combination now. I said we have what we call setup time frame, and also we have our entry time frame. But for the essence of this class and for the essence of day trading, because this is what you guys will be doing so much, though it depends on your definition of that, because sometimes your trade could last more than a day. But what you are going to be doing is day trading, and you will be picking your setup from anything from 4 hour or 1 hour. Then that will be your setup time frame, and your entry time frame could be 30 minutes and 15 minutes respectively. 30 minutes and 15 minutes as your entry time frame. Just let's stick with this. Yesterday I brushed over all those stuff. So today let's just look at top down analysis. And what is top down analysis? Let me just quickly capture everything in this saying that price is a fractal. Price is a fractal. It means that what is happening on higher time frame, what is happening on higher time frame, what is happening on higher time frame is also yes, it's also happening in lower time frame. Or better put, let me just say what is happening on higher time frame could be seen or felt on lower time frame. So what is happening on higher time frame, you can feel the movement rather on lower time frame. Price is fractal. It means what you see on the higher time frame, you can also see it on the lower time frame. Price is fractal. Let me just keep it short. So that being said, since we want to look at top down analysis, then we will now look at our how to put everything we've learned together and all sorts. Then let's go back to the charts. So please, if you can see my chart, I want you to let me know when you are able to see my chart. Can you see my chart now?
Yeah, I can see your chart.
Okay, this CHF JPY CJ. This CHF JPY. And when I mean top-down analysis, you can go as far as monthly time frame, then analyzing back to lower time frame. You can go as far back as monthly time frame, then analyze it um, as low back to lower time frame. So this is H1. Then we want to go to monthly time frame. Top down analysis, we are starting from the top down to the lower. Then don't forget that I said price is a fractal. So what is the movement you are seeing on higher time frame is also happening on the lower time frame. So let's dive directly to our monthly time frame. Don't just for the purpose of this class, one of the deficits of MetaTrader 5 on system is that the thing won't show you a whole lot of monthly candle like that unless maybe you use trading view. But from this, you know that when market is an uptrend, when the market is trending up, it will make a series of higher high and what and higher low. Then when the market is trending down in a downtrend, it will make a series of lower low and lower high. So in this case now, you will be able.
Hello, boss.
Hello, can you hear me?
It's like your screen is divided.
Okay,
Only half is showing. I mean, it's because
okay, I'm coming.
I can only see half.
Okay, let's do something. Are we dock the window now? Let me know if you're able to see it full now. What about now? Is there any changes?
Okay.
Can you see
It
it?
got wider.
Hmm?
I can see it. Yeah.
Very clearly now, back.
Yes. Yes.
Okay, so I said in an uptrend, price is making a series of higher high and higher low. Then in a downtrend, price is making a series of lower high and lower low. And in this scenario on CJ, on the monthly time frame, you can notice that price make we call something H or you can just call it PFL, which is peak formation low. This is the peak formation low here now. So you will notice that price make a low here, then it went as far back as here to make an higher high, then price make another higher low, then price went to make another higher what high, then price retrace back here to make higher low. And this is the current move which we are dealing with now for price to be able to make another higher high. So for that being said, let me use MetaTrader 5 tool. I think that is more very good than this. So you will notice that from this particular place here, price make an higher high here. Then from that place down, it make higher low. Then again, price make higher high. Then don't forget, price make another higher low. Then what we are actually expecting, we are expecting price to make an higher high if the market will continue to be in an uptrend. This is a directional bias. It means that you are trading all what you know in the market. The market, um, you are having your own bias. You get me now? So it's an if market. Is a conditional scenario. It's a bias, a directional bias. So we are going to look at this on monthly time frame, that if CJ will still continue on its bullish move, then it will go as high as possible to break this particular high that we are seeing there, which is the previous high. The price will break it. Then it's until price break this that we know that price will still continue. Likely there's greater probability that price is going to continue in a bullish momentum. With that being said, let's just quickly, you will notice when I say price is a factor is this. Just see this scenario. In this particular place, you see that it's straight. When you go to higher time frame, lower time frame, rather, this 1, 2, 3, 4, 5. For this period of 5 months, price is not just moving straight upward. Price also make a series of higher high, higher low, higher high, higher low. You get me now? Then
Yeah.
that being said, let me just clear all these drawing and leave that one that to break the structure. Okay, okay, I'm coming. Let's take them off because we want to see how possible to make our chart so clean. That is what we are looking toward, guys. Okay, guys. So the only thing, since you already know that price has been making a series of higher high and higher low on the monthly time frame, you also just mark this the low of that month. This is a significant low. Sorry, of this particular range is a significant what? Low. Then
Mm.
you mark the low and the high, and this is the high here. So it means that either price will continue in a bullish direction or in a bearish direction. What will determine is what happened within this range. Then that be settled on the monthly time frame. Let's quickly go back to let's switch back to weekly time frame. Sorry, let's just switch back to weekly time frame. Okay, on a weekly time frame also, when I reduce this, you can see clearly what we are talking about. On You can see how market is just making a series of low here. This is the peak formation low and higher low, higher high rather, higher low, higher high, then
I
like that,
am.
and then price make higher high here, and you notice price make higher low. It is on the weekly we now know that price failed to make an higher low here. It failed to make an higher high rather. This should have taken out the high we mark, but instead price is not able to make it to the upside. Then price make a what? Higher low,
A lower high.
not lower high. Yeah. What? So I'm sorry for that. Price make a what? It make a lower high because this high is lower than the
This
previous
high.
one.
Yes,
Is
high.
So price make a lower high in this regard. Then if price make a lower high, that means price will trigger a what? A sell. Price will trigger a sell. Then don't forget we have our order block here. This is our order block on the weekly. The major
Yeah.
issue is that if we are trading on the weekly time frame, that means we want to be like a positional trader or a swing trader. This is our what? This is our order block here, and you notice price come back here, and price went back into our under block, and though there's no so much clear bias on that anyway, but what we want to see and which we have confirmed is that on weekly time frame there's already break in market what? Structure.
Sure.
On weekly time frame there's already break in market structure, and where it happened here, when market failed to make an higher high here, when the market failed to make an higher high and instead stoop too low to make a lower high here, then
High.
gotten that also. Then what next? This we are getting data. We understand on monthly market is still bullish. The bullish momentum is still obvious. You get, and on the monthly time frame, we notice that there's already break in market structure, guys. There's already break in market structure, and you'll notice. Suppose we are following this PS, we could have short the PS here at this particular place. You get, because you will notice all our condition is being met. There's a break in market what? Structure. The other block here creates a break in market structure, and price retrace back into the what? Other block. Price retrace back. Though if we refine that other block on lower time frame, this could have been a possible or likelihood entry, and that means the market might likely come down. And don't forget this single red candle you are seeing represent a week. I think it will be a massive trade if we're in that trade. but that is not the case. We are not in the trade. So let's continue with our analysis. So now this is what we want to do. This is what we are looking at. After we check the weekly time frame rather, for our buyers also, we now notice on monthly price is deep bullish, but on weekly there's already break in market structure. It means that likely price is, before price will even continue, if price will still continue in a bullish momentum, it will sell for a while, but we could not still put all this together until we go to lower time frame. Don't forget, it's a top down analysis from the higher time frame to what, lower time frame.
Lower time frame.
So let's go to daily. Where is daily? Okay.
Yeah.
So these are daily time frame. So now let me begin to change the color so that we can really, on our daily time frame, you can see that here, from this particular place here, price did what? It failed to make an higher high, but it make a lower high, but it later continued to make a what? Higher high. Then it dropped back. It failed to make a higher high, it end up making a lower high, then it dropped back. But here price make another, from here, for instance, from this particular point, let me just use cross share. Let me hide this. Um, okay. From this cross share here, you will notice that from this cross share, price make higher high, it make a low, it make another higher high. Though they are not significant low, then price make another higher high. Then price is making a um, higher low
I
now.
am.
So with that being said, we want to look at the major swing on our daily time frame, and the major swing we can see, the major swing low on our daily time frame is here. Let me change it to maybe color blue. Yeah. So, and the major swing high still remain this particular position here. This is still a major swing high for the daily. Okay, this is still a major swing. And now, though there is a swing high here which we can still consider to be a major swing high to still be significant. Don't forget this is a daily time frame, so it's still significant, guys. So that being done, we can now proceed to look at fractals of price on lower time frame like 4 hours, 1 hour. Then we move. But here we by yesterday, price is still bullish on the daily time frame, but price is retracing to make uh, a higher low now. But the reason why we could not say price has make a higher low is that this particular low has already break this previous low. There's
Yeah.
already break in market structure, break in market structure, or basically we just call it, there is already break of structure, BOS. You can call it break in market structure or BMS, but here now we can see there's already break in market structure. That means there is another block here. I don't want to, it will be very useless for me to be drawing the other block on daily now because the candle are very long, unless we are going to refine it on a lower time frame. You notice here that the other block sitting around this place has created a break in market structure here. That means there is what we want to see even from the daily time frame, what we are already seeing is price we also make a retracer back now into either the other block sitting here or the other block sitting here that I've marked, which we still draw as we proceed. So let me stay clear of this chart. This daily bar. Then
Yeah.
let's go
4
to
hours.
4 hours. These are 4 hours time frame. Yeah, you will notice even on a 4 hours time frame now, price has changed from being bullish. The daily is still giving us a sense of bullish movement. but our 4 hours is already making a series of um lower high, lower low, lower high, lower low, lower high, lower what low. It means
Low.
just I will still change the color of this trend line. Let me change it to yellow. Some of the students that missed this class now, I could have just monetized this course because it's not part of what they've learned so far. I'm
Yeah.
giving them another approach to this, which is very easy. I see this very easy here. I think I'm correct, Etinoza.
Sir?
Is this much easier than before?
Yeah.
Mhm. No, very easy. You just draw a line like that, and okay. Then this place is still a significant what? A
Ah.
significant eye, and this thing is not straight, but we can manage them sharp.
Mm.
Let me see, maybe it will straight. But if not, we are not doing fine art. Okay, price is making you can see that clearly now on our H4, we now have the price inside a range in our H4. And don't forget, let me just quickly pick an horizontal line. Maybe there's a any support, any clear support. Yes, even at that particular region now, let me look at previous market. This thing is very simple. You will notice that this our low on our H4 and our, don't forget, let me just, I don't want time, I don't want to really let this class to be very prolonged, but for for the case of documenting and for the case of much understanding, we can just do the needful. On our H4, on our H4 now, we have what we call H4 low. H4 low. So you should understand what I ought to put on other line now. This our H4 low, and to the upward side, this will be our H4 what?
Ah.
This will be our H4 high. So it's not necessary for me to be just writing it every now and then. This is our H4 high. This is our H4 high. So we notice that even price, we want to see maybe there's a clear support at that place. With our H4 low, there is a support resting at that particular place. And you can quickly just check previous market, since it won't take much of your time. And if we check previous market, don't forget, here it acts as a clear support. Don't forget, here also it acts as a support. Don't forget, it also has as a rejection here. Then you can just look at it like that. It also has as a support, rejection also, a support also. So call me, let me quickly, okay, let me delete all this. Yeah, let me bring back my horizontal line. So we already know that a support is also resting in a variable support. That means, and you will also notice the behavioral pattern of this candle. That means there is a strong hope here, because you will notice that. Let me zoom in. You will notice that this red candle, it created another block. How? Number one, there is an impulsive move of price away from that zone, which is this long green candle. And that singular long green candle also do what? It did what? It take out liquidity, or you can just
Okay.
say, don't let me just speak grammar. It take out, or it break this market structure here, the previous high. I don't know, maybe you are getting it.
Yeah.
You get it perfectly.
Yes. Yes.
So you notice that this particular green candle that also um this red candle creates our other block, and this particular green candle did what? There's an impulsive move of price away from that zone, from, and that creates our other block. And for our order block to be more very solid and valid, we say it should break market structure, and it actually break market structure here. Then we could have just do something. We could have do something which we later refine. This is what we could have done. We could have just marked this place as our what? As our
Other
order block. And if we mark that place as our order block, let's assume we enter from the opening of the candle of that order block candle. Then we have our stop beneath that low. Then we could have used something like we could have used something around 20 pips. Is it 20 pips? No, we could have used something around, yeah, I'm coming. I want to be very clear. We could have used something around 11 pips rather. It's not 11 pips. Sorry. This thing is confusing. We could have used something around 20 pips. Nothing less than 20 pips. Yes. This thing is bringing three stuff. We could have used 20 pips as our what stop loss, and 20 pips is much. So what we want to do, we want to have sniper entry, and this will bring us back to something like what, one
okay.
H1. This will bring us to lower time frame. So that being said, we want to go back to lower time frame to refine, to look at what is still happening, then possibly to refine our order block on H4. Because from H4 now we've already have our bias that there is likelihood for for price to go back to this high, and even though if price will likely break this high or this particular high here, because there are liquidity sitting down there and much more, there's another block here. Let me quickly give this to you as a bonus. You will notice that if I should said where is the other block, you would have said this green candle. Can you see it clearly?
Yeah.
You could have said this green candle, but this green candle, you will notice that it take about one, two, three red candle to take out that green candle. So we can use it as our other block, but preferably we could have used this. We could have refined our other block to just be only this red what candle, red candle. We could have used that to just be our red candle. But much more to that. There is a verify other block sitting there, because you can see sharp rejection of candle if you are very observant. And this double this is something like double top.
Yeah.
So there is a lot of liquidity sitting down around that place. So price is likely to break this H4I. Prices, don't forget this are H4I here, that thick line. Prices, there's a high possibility of price breaking that H4I. So let me take this out so we can continue. So let me also take this out, guys. And let's move a bit further. We want to look at this H4. Let's check H1 and see what is happening on H1 time frame. H1. Okay. Let me quickly adjust this. I think it should be somewhere around there. Well, I think we can manage it like this. So you will notice something here now, that what we said that price is already retracing down on your H1 is now even more visible. Even with your trend line, you know that from this particular point to this point, price is what bearish until we have a break of structure to the upward side.
Yeah.
Okay, so let's just refine our order block which we've marked on H4. I think that will be worthwhile. Let's just refine it and see what we. There is something that normally sits here so that we use it to shift the market, but this thing is not showing. But let's just use it like that. I don't like how the chart is, but we can still manage it like that since we have the whole information. Don't forget, you could have also said yes, which you are very still correct here. Let's just mark our order block here. This is our order block.
Mhm.
But let me tell you, if you want to use that like that as your order block, if you want to place your this thing, if you are going to place your if you want to place your stop loss will not should not be something around here. Your stop loss must not be maybe here, just your stop loss must also take this week, this particular green candle week into consideration, because the candle is very volatile, so it should take this week into consideration. So that means our stop is still high. Let me see. Let's assume we also enter this. Just let's enter somewhere around there, and we place our stop here. Then our pips, our stop could have been something around, just let's say 13 pips. This is 12.8, around 30 pips now, 13 pips, and it's still a bit huge. Then we can still drop down to um lower time frame. Let's see 30 minutes. Yeah, sorry. Now 30 minutes, we notice we have another that block here. Let me change the. We have another other block there, sitting there. So that being said, let me look at our stop. You enter from that body, then your stop is somewhere around there. Then we already have 8 pips as our stop loss. But something let's see, maybe we can still refine it. Let's see. Then let's check this what
Minutes.
this 15-minute time frame. This 15-minute time frame. Okay. Okay. But you should note that this market, when you have long week, it depends that the market is a bit volatile. So let me go back to 30 minutes. I want to check something. To check something. To check something. Okay, let me go back to 15. If we can still refine it better, yes, I think the same order block, we could have just refined it a bit, but the refinement could now not have been so much helpful. Why? Because we are going to take this week into consideration. If we are not going to take that week into consideration, this could have been a likely um, stop loss. This could have been a likely stop loss. Here, this is the other block here on 15 minutes. Suppose we don't have week like that, block candle week, then we could have something around from this particular place here, around 4 pips, guys, around 4 pips. Then where is our likely target? Don't forget I told you this side. But if you want to be, maybe you are the type, maybe like me, I don't like to be staying in the market too long, but you can break even. I love to take profits quickly before there are some before any sign of reversal. You can just target this place before that eye closes, and that is
Yeah.
what that is nothing less than 90. Is it 90? That is 46 pips, guys. This is 40 pips, guys. I'm coming. Quickly give me 1 seconds. I quickly want to quickly give me 1 seconds. I'm coming, guys.
Okay.
Hello, can you hear me, guys? 18 sir, you can unmute yourself now. I'm back. So let's continue, guys.
Okay, boss.
Okay, let's continue. Um, you notice I said we have how many pips? How many pips as a stop? We have 4
Pop.
pips. But let's take the week into consideration. Why? Because this market is volatile. How do you quickly detect that? Because you can see long week. You get, so that we don't want to be stop out before the market will now eventually move in our direction. That being said, then what do you just do? Let's just take the week into consideration. You enter something around there, then when you take the week into consideration, you have something like 8 pips as your stop loss. We have 8 pips as our stop loss. 8 pips as our stop loss. 8.7, we can round it up to 9 pips to be on the safer side. Then, if we want to calculate our RRR, if we want to calculate, we can still have lower pips like that. How do I know? We can still drop down to 5 minutes. But let me quickly check this before we go further. And our target could have been 46.6 pips. This would have likely be our target if we enter here. Though this could have been our target, which is 56 pips. But I love to just call it a day here. Something around 56.8 or just say 47 pips. So let's round it up to 47 pips. Then we have 9 pips as our stop. Then it will be 47 divided by 9. 47 divided by 9, guys. Divided by 9. Then this could have been 1 ratio 5.2. 1 ratio 5.2 risk to reward ratio. It means that you are using the smallest lot size, which is 0.01. And if you are just you'll be risking something like 90 cents. 0.01, 0.01 lot size signify 10 cents. Each pip is 10 cents for that list lot size. It will be 10 cents times 9, which is 90 cents. You are risking 90 cents to gain, you are risking to achieve how many pips, how many profit you are risking to achieve times 5.2. 5.22. Then this would have been $4.6. It's still a good RRL, guy. It's still a good one because, and if you want to be, you want to really ride the market fully, don't forget this is where your target could have been, which is nothing less than 56 pips. 56 pips, guys. 56 pips. So it will be 56 divided by 9. Then this could have been 9. Wow. 56 divided by 9 is 9. Then this could have given us, no, am I correct? 6.2, 6.2. Then this could have, you could have made something like 90 cents. You could have made 0 point, you could have made 10 cents now times 56, which is $5.6. $5.6 now is above, it should still be close to 3,000. And how much do you risk? You risk less than 450 naira.
$3.
So You know what it means, and that is maybe if you are using small lot size, and which I advise you as a beginner. What if you are using something like 0.05 and you will be risking 0.05 times 9? I'm coming. 0.5. If you are using 0.5, it means each peak now will be 50 cents times 9. That will be 4.5 dollars. You are risking $4.5 now to gain how many profits. You want to use it to gain 0.5 times 6.22. Then this will be, what did I do? I made mistake. 0.5 cent, 50 cents times 6.2. Then this would have been, uh-uh. What is happening, guys? Okay,
Yeah,
the mistake is for me, guys. You know, I said you are risking 50, you are using 0.05. It means each pip is what, 50 cents, like that.
yeah.
So 50 cents times 9 is equal to 4.5 rather. You get me now? Then it will now be
Yes.
4.5 times 6.22. You can just do it like this. Then you are risking that $4.5 to gain what? $27. It means if you lose the trade, you only lose $4.5. And if you win the trade, you gain $27. And $27 should be close to 15,000 and 13,000 naira. And you reach something like 3,000. Yeah. So one of the benefits of this strategy, of our strategy, it gives you high risk to reward entrance. So, well, if you want to make your this thing, you can just now use. Let's look for an arrow. Let's look for an arrow. Where is the arrow, sir? Arrow. Yeah. We'll want to see from this place. Taking out this place. It's too thick. I think this should be denoted by. Okay, it's okay like that. I want to use color green. So we are looking for a trade in this regard, maybe when the markets open tomorrow. So you will notice that with this, you would have 1:6.2, 1:6 reward, risk to reward ratio, which is a very good RRR. It means that with this, let's do a little bit of financial management with this class before we call it a day.
Okay, boss.
So what do this signify? Our strategy give you this edge, and it signify this. Let me clear all this stuff here. Let me clear all this stuff here. Are you with me, guys?
Yeah.
So can you see my screen?
Yes, I can see your
You
screen.
can see my screen bar. Okay. Don't
Yeah.
know why. Okay. Um I said we want to do a little bit of risk to reward ratio. Number one, I want you to take this to heart. Forex is a business. Forex is a what? It's a business.
Business.
Forex is a business. Don't treat it like a Ponzi. Forex is a business. It means that you start small, you grow it, you grow and scale your gains in the forex industry. And the second thing that we like you to consider is that um, forex is a marathon race, and not a forex is a marathon what?
Marathon race.
Not even forex alone. It applies to every kind of market, crypto, everything, and not a sprint. One of the reasons why that people blow their money quickly is as a result of huge loss size. Huge loss size. They want to quickly blow. They want to quickly make money. You get, there is this subconsciousness that
Mm.
tell them that, ah, this analysis, instead of you risking something like 90 cents and you are now making $4.5, it's too small. Why can't you just risk $9? Then when you win the trade, you will make something around $62. Then that is mega. Not taking into consideration that you lose $9, $9, $9 on top of trade like that. Number one, it could even eventually damage your emotion, damage your psychology, and impart fear into your heart, and you lose your touch on the market, that fear will crept in, and you might even eventually blow your account. Are you with me, guys? So
Yes.
I recommend, as this is what I even use personally. So for an account of $100, because you will be going live by January 5, and I will still be giving you some OT. Just let me know when you want to go live. For account of $100, see me right in January. For account of $100, I want you, as a starter, you are just starting. I want you to only use 0.01. Use the least loss size. Use the least loss size. Don't forget, Forex is not just something you want to do for January alone. It's not just something you want to do for 2021 alone. You still have a whole lot of time to do Forex. You get me?
Yeah.
So take your time to build the confidence, take your time to build the experience, take your time to master the skill, take your time to master even financial management, the psychology of trading. Take your time, because all what you are trading on demo could not so much, that could only justify your trading skill. That could not justify your emotion. If you are trading real account and you know money is involved, there's another kind of experience or emotion you are going to be experiencing. So use the least loss size. At the end of a month, say if you trade consistently every day, let me finish that before with this, and your RRR should be something around 1 ratio. It means any trade you are taking, it means, call me, I made a mistake. It means any trade you are taking here, okay, kindly give me a second, let me, okay, okay. It means any trade you want to take, if you are risking $1, that trade should be able to give you how many dollar in return? $3 in return. One ratio
Two.
3. These
Two.
are the ratio I prescribe. I will prescribe to you 1:3, 1 ratio. You can just, 1:3, 1:5, or 6, 1:5. Just let me put 1:5, then 1:7. You are starting up, guys. See, don't jump from strategy to strategy. Maybe you now saw some guy advertising, we give you risk to reward ratio 1:50, 1:46. Guys, is possible. You get me? And even this course afford you such opportunity. Maybe by January ending, I will be teaching you a concept. Maybe after I have evaluate you, it's called how you can maximize your trade and turn your normal intraday trade to swing the trade, and it can give you as high as 1:20, 1:10, 1:46. But as you are starting off, start with what? 1:3, 1:5, 1:7. Then
Seven.
with $100 capital, I want to do the calculation for you. With a capital of $100, and you trade, I don't want you to trade nothing. Don't trade more than 3 times per day, or possibly just let me say 4. 4 is too much for you. 3 times, don't trade more than 3 times in a day. Then, when I mean don't trade more than 3 times in a day, just let me say don't trade more than 3 assets in a day. 3 assets is even much. Don't trade more than 2 assets in a day. It means you can find entry in a given asset more than what? More than once, like twice. You get what I'm saying now? Hello.
Yeah.
So you, in a given
Yes.
asset,
Yes.
maybe CJ that we just analyze now, CHF, JPY, you can find, like, in that single asset you can find like 2 or 3 entrants. entry rather. So that is not what I'm saying. What I'm saying is don't trade more than 3 assets per day. In fact, if possible, reduce it to 2 assets in a day. Then with that, let's just do a basic calculation now. In that day now, for that month, for a whole 30 days, in a whole 30 days, let's assume you are able to trade 100 times, and we are going to calculate it for 1:3. You trade for 100 times, and because you are starting up, so don't give yourself high hope of having maybe in 100 trade now. You trade 100 times. Yeah, it's correct. You take, let me just say, 100 trades. You take 100 trades, and your percentage payout of that 100 trade, I want to just sum up that 100 trade into percentage. Let's say you win 55 out of 100, or because you are starting out, you can have a bad month, and you only win 57%, 45% rather. It means you win 45 trade out of 100 trades. And if you win 45 trade out of 100 trades, then it means you have 45 trades as your profit, 45% as your profit. Then you lose 55 trade as your what? As your losses.
So lost.
Mhm. So we are still going to calculate it. Maybe at the end of the day, maybe you will still be profitable or not. Maybe you will still be profitable or not. Then let's quickly calculate this for the RR now 1:3. For 1:3, and you use the I advise you to use the smallest what? Lot size. You use
Lost size.
smallest lot size. So where is our calculator? Just if you lose, we can just use $1 now in this regard. It means if you lose for that one, we are just going for easy calculation. We base everything on $1. It means you are using 10 pips as your stop. You get me now? So 10
Yeah.
pips, which is $1 now. So it means if you lose $1. If you win, you gain how many dollar? You gain $3.
$3.
So for your profit now, or let me calculate your loss first. For your loss now, it means since you lose, your loss is equal to 55 times multiplied by how many dollar now? $1, because you
One.
lose 55 times, and per loss you only lost, or you only lose $1 rather. And for your profits, you have a win payout, a payout win of 45 times. 45 times 45 multiplied by
That's
what?
three.
Times 3
By three.
is equal to what?
That's
This will be equal to,
135.
okay, let me add this first. This, you lose $55 here for that month.
Yeah.
$55. And here what happened?
Again, $135.
$135. And don't forget, you don't use with this, don't forget you still have your $100 as your capital. I don't know, maybe you get what I'm saying. Because you are only risking 1%.
Yeah.
Are you with me?
Yes, I'm still with you.
So it means you are only risking 1% of your trade. You still have your $100 intact. Then your first, that means you would have do what? Or let just leave it like that. That you end up the month with $135. Guys, you tried, because that is your first time into Forex. In fact, I want you can screenshot this now, or maybe when you are watching the video, you can write it down. Let this be your trading plan. Then what if we have, for our maybe for those, you are able to quickly cash up, and you are trading 1:5, 1:5 now, just the same process. Your loss now is equal to 55 times 1 bar. Then your profit is equal to 45.
Yeah.
45 times 5. Then
That's 5.
this could have been you lost $55. Let's put the dollar sign. It's very important, guys. Then 45 times 5 would have given you something about
225 dollars.
45 times 5 will give you what? It would have given you about two what? $235.
225. 225.
$235. Guys, this is profitable, guys. Then like this. In fact, should I shock you? Between this, we were being taught something in school. We call it average. Average bar, the mean. So we can just get the average of the two,
Ah,
which is equal to, because there are times you will have a 1-3, you will make trade of 1-3, and you will make trade of 1-5, 1:5. Then we could have just sum it up. 135 plus 135 plus 235 is equal to 135 plus 235. Okay,
yes, man. One.
with open it, it's 225. Oh, 225.
225.
It will be what? I think this should be up to 350, like that, or 450 rather.
Yeah.
What is that? Then it
I'm
will
calculating it.
be plus 135. Then
There's 360.
360 will be divided by 2. Okay. It means, guys, in a given month, this would have given you divided by 2. It will give you 180. So it means in
180.
your first month, if you make anything from 135 upward, you are what? Profitable. You are what? Profitable.
Yeah.
And you are likely
Profitable.
going to make much more than that. Because as you give yourself to practice and all what I've taught you, and you keep applying those things, you keep evaluating yourself, you keep doing what is necessary, guys, then you can scale up the game. Second month, you can be using 1:4. Third month, 1:5. And before you know it, you will now see that you are very good at this stuff. You would have really mastered your skill. Is that taking, guys?
Yes, sir.
Okay, before we call it a day, I don't know if there's any question.
I understand.
You understand perfectly.
Yeah, yeah.
Okay. I don't know, maybe
Understand well.
the other participant have left. Maybe she
Yeah.
has any question. She's still on, but let's wait. Maybe
Yeah, she's still.
let me check. Do you have any question, ma'am? Can you hear me? Can you hear me, ma'am? Okay, maybe she's not online now. So that being said, guys, we come to the end of today's class and have a wonderful time. Okay, there's chat. I think there's 3 chats. Okay. This is no question. So let's call it a day for today. Cheers, guys.